Today is a big day. Today could determine what happens in the next few weeks and maybe even the next few months. We'll see. If you watched Trader Tip Tuesday yesterday, I talked about that you need to watch one market, and that one market is the 10-year Treasury note market, either watching the yield or watching the futures price. And the reason for this is the 10-year note is the best barometer right now for what's happening in the interest rate market. And if interest rates continue to rise, stocks will have to go down, as they have been doing. But I mentioned yesterday that we had the CPI number today. And with the CPI number, this is one of the big economic numbers of the month. And I said this number could have a big impact. It is a catalyst. If you watch me, I talk all the time about the power of catalysts. New traders want to ignore catalysts. They want the market to be continuous. They want everything to be smooth. That isn't how it works. The market goes through these phases where it waits for key events, for new information, and then the market responds to this new information. Well, CPI is one of the big economic numbers that serves as the catalyst. So we have the number today, and there was actually a precursor to CPI yesterday, which was PPI, the Producer Price Index. I want to share with you quickly, I want you to see what these numbers actually were. Yesterday, PPI was forecast to come in as a 0.2 increase, and it actually came in flat. And that's the core PPI, and the PPI month over month was supposed to come in at 0.4, and it came in at 0.2. These are both dovish numbers. Less inflation, which would be bullish for stocks and interest rates coming down. Now, yesterday, the market didn't respond too much to it, and it's because PPI is a less important number. It's important, but not nearly as viewed as CPI. So today we have CPI, the big catalyst. And it's interesting. So core CPI came in at 0.2 instead of 0.3. And the CPI month over month and year over year came in line. But what's important is to watch the price action off of these numbers. I said yesterday that this number, this economic number, had the potential to act as a bullish catalyst. The market has been begrudgingly going down. You can tell it doesn't want to go down. It actually was in a very bullish environment, a very bullish frame until interest rates started going up. And that was throwing water on the fire of this bull market. So let's look at what happened today. And this is important. One of the things that we're going to look at is what happened in the 10-year note. Well, this big bar right here, these are tick bars. Okay, these are tick bars, not time bars. And you can see there was this big move right off the number. So this is right at 7:30. And you can see this finished at 7:35. So in the first 5 minutes, we got a major rally where basically the 10-year rallied 14 big ticks. But what's also important is the volume. And I want you to notice, first of all, we had high volume on the number. That's not such a surprise. But after the number, the market has continued to rally. And it not only has continued to rally, but it's continued to rally on strong volume. So this is the average volume for every 5-minute interval. And when you see these circles, this means it is significant volume. It's essentially 150% or more of the 5-minute average volume. And then down here is the cumulative volume throughout the day. This cumulative volume shows the volume building through the day. That's why you see it just keeps getting bigger and bigger and bigger. And it shows where the volume is right now versus where it would usually be. The gray is where it usually would be, and green is where it is now. So one of the things that we see is today we're having an above average volume day by quite a bit. So look at the frame of what's going on here with the 10-year Treasury note. We have a big bullish move off the number on high volume. It follows through up on high volume as well. So we have a big up day on really strong volume off of a catalyst. So this is setting the frame for a potential environment shift. So we're going to be watching this really closely. So for today, is the market going to continue to rally? The more it rallies, the more bullish it will be. Is it going to pull back? If it pulls back into the range off the number, that would be less than ideal. We don't know, though, so we're going to continue to watch. So let's see what happened in the stock market off of this number. So now we're going to go look at the E-mini, the S&P E-mini, and you can see that the E-minis exploded off the CPI number. Now, right now, they haven't really separated from the high of that range. So what do we want to see? We'd love to see this move higher through the day. That would really help. We can also see there was a bunch of volume right off the number, and then since then, volume's been slightly above average. And if we look at the cumulative volume, right now we're having an above average volume day. So what do we want to see here? We want to see the market go out towards the highs. We want to see it do it on high volume. We like to see it get away from the range that was off the number right here, which basically this is at 735, and that number is 59.66. Right now it's 59.69. So we want to see it rally away from 59.66. Now, that won't be enough. We'll have to analyze it, but it could signal a short-term bottom, maybe even an intermediate-term bottom. So today has the potential to be a catalyst low, where we put a low in and we rally. The price action today and the price action tomorrow and the price action in the next subsequent days are going to be really important. Can we close near the highs today? And then tomorrow, can we take out those highs and close higher again? If we can do that, if we can do it on volume, that sets up a backdrop of a low that we can lean on to be long. If these things don't happen, well, then that whole thesis starts to get really muddy, and we open the door to go back to where we came from. So continue to watch the 10-year note and how that drives equity prices. Watch the price action into the end of the day and watch what happens tomorrow. Just remember, I'm Chuck Whitman, and I build great traders that lead great lives. Traders I've trained have generated in excess of $1 billion and are found at some of the largest proprietary trading firms and hedge funds in the United States. Let's see you go make some money.